Since January gains, recent outlook of Nigeria's stock market has not been particularly impressive. The Nigerian stock market ended the past week cumulatively on a bearish note, as the all-share index and market cap depreciated by 0.63% and 0.61% to close the week at 40,186.70 index points and 21.026 trillion naira, respectively. The Nigerian equities market is reversing some of the January gains, which were driven by factors including continued local participation, positive sentiments around vaccine distribution, despite reported increase and new strains of COVID-19 virus, and the outlook that fixed incomes yields could remain lower for longer. According to analysts, the current bearish trend in Nigerian stock market scores by the widespread profit-taking activities which started in the past 3 weeks, as local investors are currently hunting for greater returns on investments, thus increasingly selling off their equities positions and plowing the proceeds in fixed income instruments. At a time majority of companies' earnings reports for 2020 are yet to be issued. Well, to discuss this and give an expert analysis on the performance of the Nigerian capital market, I have joining me in our Lagos studios is a stockbroker and, of course, a financial analyst, Mr. Rotimi Fakaijo. Thank you very much, Mr. Fakaijo, for your time.
Afternoon.
Yes, first, I reeled out those figures starting and see what happened last week. A lot of negative. Well, would you agree that it is all of this profit-taking and all of that is taking charge in the market? Or what is really playing out? Why do we have this bearish sentiment at the moment?
Well, year to date, the market is 0.21% down. That was as at Friday. And looking at it starting from what we've seen so far, we have seen about 0.05% again down today. Well, all those, when the market started out in January, everything looked good. There were good projections, and with more local participation, everybody was at ease. At least there will be a steady upward trend for the market. It may not be consistent. But the whole thing, we started seeing the distractions when the CBN did the first Omo operation, which was out of this world compared to what had been before. And I see that was not enough. They sent out a news information that they're going to do a treasury bill, which they did last week Wednesday, at 11%. Average rate for last year was about 3%.
Yeah.
Now, jumping from 3% to 11% for a risk-free asset, tax-free asset, tax-free return, then definitely we should see what we are seeing in the equities market. So it's not unexpected. So it's not actually profit-taking. It's investors actually dumping their shares and moving back into the fixed income market.
This looks like a regulator coming into, because this is not going to be positive in its entirety.
You see, why we're having this kind of thing is that the various agencies, the various regulators, they act in silos. There is no synergy between the capital markets and the money market. I believe in taking any decision, we should look at the all-round effect on the larger economy. But that is not so here in Nigeria. So for CBN to come up with what they are doing right now, it beats the imagination of investors and even analysts. That's what informed an average rate for a treasury bill, maybe like 3% all through the year 2020, and a sudden jump from 3% to 11%, I think is quite unacceptable. And it makes no sense of whatever projections that anyone had made. And also for those who are serious-minded, they will hardly take this economy seriously.
Because you just take your dollars, your bag of dollars, and move straight to the money market. Now, I was even thinking the second wave of COVID-19 also had this effect on the market, considering what's even been happening globally? I don't know how that comes to you.
Well, even on the global scene, we've seen up and down. And we've seen more up than actually down. And one would have thought that the sharp increase in the price of crude oil, that is getting to as high as $63 per barrel, will have been a plus for the Nigerian economy. But we are seeing a different thing entirely. Though they say we have come out of recession by 0.11%, but all that may not be enough. Like the gain we may have in the crude exports is a loss we are going to have in the importation of PMS.
Exactly.
So it may eventually nil out.
It's like rubbing Peter to paper.
But even if it eventually nils out and stop at that, it could have been better. Because by the time you have an increase in the price of PMS, it's going to have an implied effect on the price of goods and commodities. And that also will translate to higher inflation. And basically now, I don't know how they intend to manage this economy, because what we are seeing right now is not management at all.
Let's look at the larger economy, which you've actually touched on. We see inflation standing at 16.47%. We also see, like you said, marginal growth of 0.11%. Marginal, but one way or the other, technically, I think that's the word. We're out of recession. And we're waiting for first quarter of 2021 would give to us when the figures are out. What effect do you also see this having in the generality of the capital and the money market? All of these outer economy effects, inflation and all of that?
Well, I think for Nigeria, technically exiting recession, it makes some people or some investors to begin to build up confidence in the economy again. But that may be short-lived by the time we see the inflation figures at the end of this quarter. So, all in all, a step forward, 2 steps backward. So the trend we are seeing right now, I don't think is good enough for us. Ordinarily, no matter how hard pressed the Nigerian economy has for fresh fund injection in order for them to be able to sustain the 2021 budget, I don't think it was informed to have actually moved that rate from average of about 3% in 2020 to 11% in February 2021. I think it's quite uninformed. So I believe strongly, with the way things are, we are back again, not knowing what to do. Everybody just sitting and looking.
Looks like policy somersault here, because when you look at all of this, even interest on bank savings now very low. And now the money market all of this seems to be worrisome. What kind of things do you think government, because we see the economic growth plan, we see the ESN, which they said has put us out of recession. What kind of policies do we now need from government to strengthen the Nigerian Stock Exchange? We like the figures we saw last year, all of the commendations. So what initiatives should be put in place to make sure that we benefit as well as we should from the exchange? Because some countries depend solely on the exchange to even build infrastructure. We have not gotten to that point yet in Nigeria. When do we get to that point? And the second part of my question is a 2-in-1 question. Let's also assess sectors. How are the sectors playing at the moment? From the oil and gas to insurance. Let's touch on these sectors and see what's playing out as we step up in the new week.
Well, I think for what policy should be put in place, we have several development plans for Nigeria.
Yes.
That if only implemented year on year or maybe every other 2-5 years, we come up with different plans. On the table, in the print, it looks good. But hardly have we implemented such. Now, again, we need to look at harmonization of policies as touching different sectors of the economy. So that harmonization has not been there. Because before I go to your question, I look at the situation whereby PENCOM invests about less than 5% of their total takings in the equities market. And whenever situations like this arise, who we see in the market first selling is at the PFAs. PFAs are supposed to hold long term. They're not supposed to be speculators. If they want to play as speculators, they should rather keep the money of pensioners and not even come to the equity market alone. So we now know that it's only the high net worth investors or other retail investors that are actually playing the market. So coming back to sectorial performance and all of that, I think so far the banking sector negative, the industrial goods is very negative, consumer goods is still positive, oil and gas is positive. So then the ICT is also negative, although there is no distinct sectoral index for that. But when you look at those securities in that particular sector, both of them are trending negatively for the year. So, and I think as such, we really need to look very deep and see what lies ahead. Because for all I know, in every situation that is normal, some of the results coming out are quite good. And the dividend return is also quite encouraging. So we don't expect investors to start dropping their securities as at this time. They should rather wait for the dividend and also look forward to a better dividend in the next season. Take, for instance, United Capital, paying a dividend of 70 kobo. That is quite mouth-watering. And it's so surprising that people are dropping that particular stock. So there are some things that hardly has a defined explanation. You can't even just find words to say, this is why this thing is happening. So it's quite very unfortunate. But I think there's much more we can do if there is harmonization of policies as touching the different stakeholders.
Harmonization of policies is key. Now, let's look at the general outlook, because with this picture you're painting with all of this reality and what is happening with the CBN and people moving now to the other side of the market, I was thinking about foreign investors walk out and walk in, what the impact will be on the capital market or trading in the capital market. What's your general outlook as we move on in Q1 2021?
For foreign portfolio investors, that may be a hard nut to crack. The reason is that the outlook for the Naira is very gloomy. So investors, analysts believe that the Naira is still going to suffer further devaluation, even if the CBN does not pronounce it. There's so much pressure on the Naira. So there is no sane foreign portfolio investor that will bring in dollars at the present rate. And since they usually play short term, in another 12 months, they want to go back at about and exchange the dollar for about 500 naira. They won't want to do that. So if we see a situation whereby the Naira, the exchange rate is fairly stable, then we can see an influx of foreign portfolio investors. But as much as that is not in place, then definitely we're going to see them stay back and not even considering this economy at all.
Before I go to my next question, Monday trading is negative again. The all-share index is down 0.05%. Top gainers, we have UPD Credit, Chi PLC, we have Academic, we have Conest, UPL. Top losers, we have AfriProd, we have Lasaco, we have Nigerian, WAPCO, Red Starex. What do you make of this figure for the first work day of the week?
Very, very gloomy. Because we were hoping. Earlier today in the markets, I think we saw a gain of about 0.07%. And we thought that that was going to be sustained. But ending this way again. But again, what may only make it look hopeful is that the extent to which of that loss may make one to have hope for, as we run through the week, of the market eventually becoming green. So 0.05% with the banking sector positive, I think there is hope for the week. But looking at it marginally, I think it doesn't portend good hope for the week. I mean, portend good outlook for the week at all. But I believe strongly that we're going to get green this week.
Because I'm looking at that attraction that you identified on the other side of the market. People who just want to move monies and just dump in that place, 11%.
We may have a situation whereby a particular result may just trigger the market into positivity, positive trend.
I was also thinking about maybe new incentives or financial literacy and initiative that do you think we need to apply that will help increase participation in the market? Or is this not the time to take initiatives like this? Because we need increased participation one way or the other.
Well, I think it's been done over the years, but I think we are not seeing the desired result because it's not being done correctly. How are the approaches being done? You understand what I'm trying to say?
Yeah.
In what way are they approaching financial literacy to get more people into the equity market? Very few people are actually interested. How widespread are stockbroking firms in the rural areas? You don't get a positive answer. You don't get a yes for that. Then again, in terms of fintech, how effective is that playing out for the equity investors, especially new equity investors? That also is a negative. So you need to look at those two, and you need to see how to fine-tune it. Basically, the upcoming youths, are they interested in the market? The answer to that is definitely no.
No.
What should be the encouragement? What did their fathers tell them about the equity market? There are some people that will not even come close to the equity market because of loss of confidence, loss of investment in time past. So I believe strongly that a lot of things need to be corrected, but the pace at which that is being done is exceedingly too low. That pace is exceedingly slow, and I believe that they can do much better.
Mr. Fakaraja, hold your thoughts. Still have you in the studio. Effiong Ekop has joined us to continue this discussion. Effiong, it's great to have you start the week.
Thank you.
0.05%. The market again is down, and Mr. Fakaraja was just talking about what's been playing out, some policies from the central bank, how it has affected the market. Please take us through what you make of all of this, and for the top gainers and losers for the day, the first work day of the week.
It is instructive that the month of February, pictured negative activity in the market and actually sustained throughout about 3 weeks now. I have a strong feeling that this same month of February is going to, carry it out and conclude negative trading on the floor. Because we do not need a soothsayer to say that investors are reacting to some elements in the larger society that are not very, very good for investments. We talk about insecurity, social insecurity, very, very serious. And then you talk about the value of the naira, very serious. The coronavirus pandemic, then inflation, high level at 16%. So when you take a basket containing all of this and then you throw at an investor, he will run away. Because after making provisions for all of this, what margin or profit will you make on your investment? So the regulators and government officials, when they make policies, they should think about investors, they should think about the market. So for now, the January performance of our market has actually gone down. As at last week, the market, lost the 5% performance of January, and we were just at about a level of 0.04%. So if we continue this 1 week in the negative, you can guess what we are going to see. So the Nigerian market, or in the Nigerian investor, he is not feeling fine about the kind of sentiments that we see in the larger society.
Mr. Fakaraja, I like your views on that. That's very important. Security and all of that. How does it affect investors' confidence with regards to the Nigerian market?
Well, people go to where their investment is secure. Safety is the first thing when you want to do any investment. If the environment is insecure, then the safety of that fund, of that investment, is highly threatened. So you will ask yourself, is Nigerian environment secure? with all the news that we see every day, with the responses of the federal government to such news, is Nigerian environment secure? Definitely the answer to that will be no. So if the answer is no, then you can have a secured environment for viable investment. And if people are not bringing out money to invest more, then definitely the quantum of investment for everybody, especially in the equities market, is definitely sliding down. So we need a more proactive steps to be taken by the government. I hope they will know what to do.
I thought you were talking about quantifying these losses and what steps. Mr. Fakayi just mentioned steps, particularly with regards to the market.
You see, I'm not very, very happy with the action of those who control the money markets. You know, the way they do it is politics somersault. That's what we were, as at December, very, very happy and thinking that, well, the CBN and others, they will, you know, sustain what helped the capital markets to grow. But when we entered February, we've seen something that they up the kind of percentages that now draw people back from the capital market down to that area. And don't forget, majority of the people who play in the fixed income market, some of them are foreigners who just want to take money out of our own environment. Not that they will stay for long. So they wait for this government, you know, thing that is almost risk-free, and they just take free money and go away. We should not be, you know, encouraging those kinds of investors. We do not need them. You understand? So throughout last year, we saw indigenous investors playing big in the stock market, and we sustained. Why not we do everything to encourage them? Do you understand? So, leaving Nigeria, can we round up on African markets that are close, mixed? In South Africa, it's not very easy for that economy. The market 0.05% in red. South Africa, the coronavirus has hit that market very seriously, and we see investors only staying with the bonds markets to support government's revenue to, you know, be able to, you know, recoup the play of infrastructure. Kenyan markets closed positive, 0.75%. I think the market in Kenya is just beginning to come up after effects of coronavirus and then the destruction of the tourism subsector. When we come back to West Africa, the Ghanaian market is closing flat. For a very long time, the market in Ghana has not been, you know, that strong. For about 3 years, it's been in the red, and we just see it picking up because don't forget the banking subsector in the Ghanaian industry. They had very serious crisis before the pandemic. So how they go around all of this and make the economy to rise up, it will be a good thing to do.
Well, indeed. A parting shot from you, Mr. Fakayi, on the state of our market and across the continent. What more should we expect?
Well, I think, as Efung has said, the coronavirus has actually hit every economy, although it hit more, some economies more than others. But for back home, I think he talked about policy somersault. If we can streamline our policies and be proactive and have a long-term, a forward-looking approach, then definitely we get things done better, and it will be better for all.
Indeed. Any question from you?
Tolu, we need our regulators to look strongly to our capital markets, because there we need to take and grow the economy. Investors need to be supported. You do not allow them go in there, burn their fingers, and then come out. Next time, they will not encourage you. So we need to encourage our market, encourage investors, especially domestic investors. We should for now forget about even these foreign investors. They are not coming with any bag of dollars, because the environment is not really inviting to them.
Thank you very much. Thank you for your time. I was always appreciated on the show. Mr. Rotimi Fakayi, I must thank you for this Monday, for you breaking it down for us, at least looking very deep into the market. Thank you so much for your time. I appreciate this again.
Pleasure.